In the past month of June, Australia's real estate market remained strong. Perth, Brisbane, and Adelaide performed well, while Sydney, the most expensive city in Australia, maintained a steady slight upward trend. However, Melbourne's housing market lagged, dragging down the national average. Meanwhile, inflation in Australia continues to rise, and most expect a rate hike. What will affect the real estate market after an interest rate hike in Australia? How long can Australia's high interest rate environment last when the rate cutting cycle of G7 countries has started? In this video, we'll analyze the trends in Australia's property market in June, the Australian economy and related international economic trends affecting property investment, and try to predict what will happen in the second half of the year. Should investors enter the market now or wait? Hi, I'm Alex. Welcome to Aus Property Strategy, where I share information about real estate investment, economic trends, and wealth creation. If you like this video, smash the subscribe button and turn on the notification bell to watch new weekly videos. Without further ado, let's get into it. Let's first take a look at the Australian real estate market trends for June 2024. The National Housing Market Index rose by 0.7% in June, marking the 17th consecutive month of price increases in this cycle. Continuing the trend of slow but steady growth since the beginning of the year, Sydney has risen for 17 straight months with a 0.5% increase in June, slightly slowed by 0.1% compared to May. Although the growth rate has slightly slowed, the overall upward trend remains unchanged. June is traditionally a slow season for the housing market, so a slower pace increase is normal. In June, Melbourne's overall prices shifted from growth to a 0.2% decline and remained flat for 12 months. This coincides with the introduction of the infamous Nightmare Budget by the Victorian government in late May last year, which immediately led to flat prices. The Victorian government initiated a 10-year debt repayment plan, introducing unprecedented policies to suppress property investors, forcing many to sell the investment properties. The selling trend hasn't stopped, with new listings in June up 14% year-on-year, clearly making it a buyer's market. Brisbane saw a 1.2% increase in a month, marking the 16th month of growth. Although 0.2% slower than May, the market remains strong with no signs of weakening. Perth market growth remained unchanged, rising by 2% for the third consecutive month. Perth continued to lead the nation without any signs of slowing down. Australia's various cities entered a new trend several months ago, dividing into three market categories based on city size. Big cities like Sydney and Melbourne see flat to slight growth. Mid-sized cities like Brisbane, Adelaide, and Perth experience high growth, and small cities like Canberra, Hobart, and Darwin remain flat. One reason for this trend is population, which is linked to international and interstate migration, housing supply, and state finances. Mid-sized cities generally have better financial conditions, while big cities have weaker finances, too much debt, and insufficient government investment. For those watching this channel for the first time, I must add that the national average measures the average price change and does not represent all individual properties. For instance, a 2% rise in Perth does not mean that all properties in Perth rose by 2% in June. Some may have risen faster and some may have declined. Therefore, in practice, each property and individual financial situation must be considered separately. From the 90-day trend chart, Sydney's real estate market shows steady growth but at a slower pace. Melbourne's market remains stagnant with no growth. Brisbane and Perth continue to impress with rapid increases. Sydney has the highest average housing price, followed by Canberra, Brisbane, Melbourne, Adelaide, and Perth. Based on the current market trends, it is estimated that by October this year, the average house prices in Adelaide and Perth will surpass those in Melbourne. What can I say? Sad, but inevitable. Nationally, rent continued to rise in June. Regardless of the city or property type, rents increased. Perth rent increase rate still leads the nation, and this has been the case for a year. However, long-term data shows a slowing trend in national rent increases, which is directly related to reduced immigration and student numbers and the commencement of major developments, which I will discuss later. Nationally, the average rental yield is 3.7%. Sydney is the lowest at 3.1%, while Darwin is the highest at 6.5%. The asset class of Australian residential property is inherently high growth and low cash flow. High cash flow is only relative to the category. This highlights one of our investment principles. Investing in Australian properties without a mortgage, all in cash, might not be as profitable as putting the money in a fixed-term deposit or buying index funds or even long-term stock investments. The main difference between Australian property investment and other asset classes is the ease of using leverage. Through practical exploration, we found that the best way to increase cash flow in Australian residential property is short-term rentals. We've been helping our Vision members manage short-term rentals in Sydney, Melbourne, Brisbane, Gold Coast, and Perth. If you need short-term rental management, please get in touch with us via the link in the description below. In the first half of this year, 4 cities in Australia have reached historical price highs. Many people fear the word record high. Simply put, without understanding the market fundamentals and lacking analytical ability or willingness, the fear of not knowing the trends or the future leads to the hesitation in investing when hearing record high. If you don't understand the market, watch more videos on this channel. For those scared of record high, simply have a look at the data. Perth has set new highs for 12 consecutive months. A lot of people asked me if they should buy Perth while it hit a record high at the same time last year. They would have made a 23% gain if they did. Investing requires rationality, or rather, going against human nature. Our channel fans are pretty rational. Last Saturday, we held our monthly live webinar half-year edition, and survey showed 37% would invest in Brisbane and 27% in Perth, indicating strong confidence in the property market of mid-sized and small cities. Australia's real estate market in the first half of the year was positive, with the market rising by 8% in the 2023-24 financial year. Based on the national average house price of $794,000, homeowners earned an average of $59,000, roughly equivalent to a year's salary for a recent university graduate. Perth rose by 23.6% and Brisbane by 15.8%. Rent rose by 8.4%. However, we observed that the rent increase in Sydney, Melbourne, and Brisbane slightly slowed, possibly due to the decreased immigration and student numbers. Investors with properties near universities should pay extra attention in the coming year. Australia's inflation rebounded slightly in May, with the trimmed mean CPI rising by 4.4% year-on-year, accelerating for 4 consecutive months, leading more economists to believe that the next move by the Reserve Bank of Australia will be a rate rise. Meanwhile, May's unemployment rate slightly fell to 4%, which could give the central bank more confidence to rate hikes. In last week's live session, 2/3 believed Australia would raise rates. Recently, I helped a long-term Vision member review their investment portfolio, and they wondered if they could buy another property in the second half of the year and what the impact of the 2 rate hikes totaling 0.5% would be on holding the property. I said there would definitely be an impact, but let's do the math. For $800,000 property with an 80% loan, an extra 0.5% interest equals an additional $3,200 a year, or $62 a week. Can you afford that? I asked him, and he laughed. So when investing, if unsure, always do the math. The numbers might contradict your intuition. We noticed some changes in building approvals. The total number of approvals for all property types rose by 5.5% year-on-year in May. Standalone houses rose by 2.1% month-on-month in May, and apartments and townhouses rose by 16.3% month-on-month. The trend chart shows a bottom-out pattern, suggesting Australia might be entering a development boom era. Building a house takes about a year from approval to completion, and apartments, townhouses take about 2 years, sometimes 3 to 4 years. If the trend continues, supply will start to rise slowly after a year. The actual market impact might be seen after 2 years. And thus, without changes in interest rates, the market situation will likely maintain for 1 to 2 years. With expected small rate hikes and subsequent cuts, demand will generally increase. The balance between supply and demand ultimately determines market trends. Internationally, there are recent developments that might affect Australia's economy direction and interest rate policy. Firstly, US inflation continues to fall. In May, the US CPI fell to 0 month-on-month, indicating no inflation. Even the core PCE, the Fed's preferred measure, dropped to 0.1%, significantly slowing down. The Fed's unchanged rates, but falling inflation leads to higher real interest rates, increasingly curbing inflation. The market predicts the Fed will raise rates on September the 18th. However, the prediction often change, so don't worry too much about their accuracy. Currently, 2 G7 countries have already cut rates, and the next might be the UK, as its inflation has fallen to 2%, and the UK just had an election and needs to show some performance. The US is also nearing a rate cut. Surprisingly, more and more people from Taiwan join our Vision membership to invest in Australian real estate market. We help them with tax planning, investment strategies, and rental plans. Some of them even took loans from Taiwan. where the interest rate is only 2%. So even if they don't buy a property, they can earn quite a bit. The skyrocketing share market and the tight situation in Taiwan prompted many to cash out and move their money to Australia. And this is a great option. To sum up, Australia's real estate market continues its upward trend in June. Sydney saw slight growth, Brisbane and Perth surged, while Melbourne struggled. If the Victorian government doesn't stop squeezing property investors to repay government debts, Melbourne's property market will find it hard to rise. Australia is expected to raise rates in the second half of the year. After the rate hike, the market might cool briefly, but as people adjust to the psychological and financial impact, buying mode will return. Australia's fundamental supply-demand balance hasn't changed. After a rate cut, the market will see a booming period. But how should we invest? When investing in Australian real estate market, first discuss the notion that prices have peaked and won't rise further. Historically, the Australian housing market has short-term fluctuations but long-term growth. While a future correction is possible if you share the same long-term investment principles as us, this potential correction isn't much of a big deal. Just ensure you have sufficient cash flow for downturns. Next, learn to capture different cities' property cycles to hedge your investment portfolio risks, leveraging tax differences across states and short-term rental laws to increase returns. Additionally, use various tax tools to legally reduce tax liabilities, retaining more of your earnings. Use different entity structures to enhance borrowing capacities and start building your self-managed superannuation fund early for retirement planning. And finally, establish your investment team, including investment strategy, legal, accounting, wealth planning, and loan strategy. Join our Vision membership to solve all your Australian real estate investment problems. Our team will manage everything from personal wealth positioning, investment planning, loan strategy, legal support, tax frameworks, wealth planning, and inheritance to comprehensive wealth consulting and management. For consultation, check the video description or visit our website for Vision membership details. If you made it this far, please give me a thumbs up, subscribe, and share this with your friends. Turn on the notification bell to watch new weekly videos. And have a good one. Bye.